Hey credit warriors, welcome to the show. And we have a personal finance video for today. We are going to be looking at how to invest $1,000 in the year 2021. And that's the year that the stock market has been on a tear, with the Dow up at over 35,000. And you may be thinking, are there still places where I can invest a relatively small amount of money, like $1,000, for a good return? And the answer is, of course there are. So in this video, we are going to be looking at 5 options for investing $1,000 in the year 2021. And let's just make the comment as well that we are talking about investing. We are not talking about gambling with your money, playing the earnings on a certain company, or pumping your money into a certain altcoin, expecting it to 50x in value. We'll still talk about cryptocurrency, etc. later on in the video, so stick around for that, but we are talking about investing. So let's get going. Number 1, index funds and ETFs. Now, with the stock market at all-time highs, if you're looking to buy the dip, well, you can't really do that yet because we have not been presented with a dip to buy. However, the amount of videos on YouTube talking about the coming stock market crash is unreal. But the reality is no one really knows when the next crash is coming. However, if you invest in an index fund or something that tracks the market, okay, like VOO, which tracks the S&P 500, it is highly likely that your money could go down before it goes up. But this drop would only be temporary, because if you are investing in the S&P 500, you are basically investing in the US economy as a whole. And if the US economy was to drop permanently, you would have much bigger problems to worry about than your $1,000. So chances are that the US economy will recover from any momentary crash. Now, there is an age-old saying about the stock market: time in the market beats timing the market. And basically what this means, and they've worked this out from statistics, is that if you just put money in the stock market and hold it long term, you actually make more than if you timed it perfectly, buying every dip over the long term, okay? So over the long term, the S&P 500 delivers an average annual gain of 7%. So that means that if you invest $1,000 in the S&P 500 or an index fund that tracks it today, that would become $2,000 in 10 years' time. But since there has been talk of a crash, and for those of you who want to make a little bit higher of a gain in the short term, it may be worth holding on to some of that $1,000 just to see if this actual crash happens. And there are a lot of factors which could contribute to it, such as inflation, the high PE ratio of the S&P 500, the Fed raising rates, and also the historical precedent that out of 8 bear markets since 1960, excluding the coronavirus crash, each one saw at least one pullback of 10% within 3 years of the crash, and 5 of the 8 saw 2 pullbacks of 10% or more. So my advice, which is not advice at all because I'm not a certified financial anything, I'm just some guy on the internet, but what I would do would probably be to invest, say, $500 now in the S&P 500, which is, yeah, it's at all-time highs, but whatever. So $500 now, and then I would dollar cost average my way in over the next 5 months with, say, $100 a month. Or what you could also do would be to invest $500 now and then wait for the next drop and invest another $500 to really bring down your cost basis. However, just be informed that over the long term, okay, you're talking 10, 20 years, this does not lead to increased returns. It's really only over the short term of a few years that you would see a higher rate of return. Number 2, dividend stocks. Now, I normally wouldn't recommend individual stocks for people who are investing small amounts of money, such as $1,000. But with dividend stocks, it's a little bit different because you are looking at very stable companies which have progressively raised their dividends over many, many years. And these are called the dividend aristocrats. And the criteria is that these are S&P 500 companies that have progressively raised their dividend every year for the past 25 years. And there's also a minimum market cap for them as well. Now, the most famous of these companies is AT&T, the cell phone service provider, which famously pays a dividend of over 7%, which is incredible. But AT&T has announced that it will be lowering its dividend after its spin-off of Warner Media next year. Now, AT&T shareholders will get shares in that new company. However, that company most likely will not pay a dividend, and the AT&T dividend will go down to between 3 and 4%. But there are other good companies from the dividend aristocrats to choose from, like Chevron, that pays a 5.5% dividend and has raised its dividend every year for 33 years. Or ExxonMobil, which has a 6.32% dividend yield and has constantly raised its dividend for 37 years. The Motley Fool has a really great list of all of these companies that you can flick through and get some ideas from. And the cool thing about dividend stocks is that you're pretty much guaranteed a quarterly payback, but there are some stocks in the dividend aristocrats that also might give you a bit of growth as well. All right, let's move on to the next one. Number 3, wine. Did you know investing in fine wines is one of the best kept secrets of the ultra wealthy? Well, it is. They buy wines, they store them for years and years and years so they age and become better and better, and then they sell them for a profit, just like any other investment. Now, wine has actually outperformed the S&P 500, delivering an average annual gain of 13% over 30 years and an average annual gain of 11% over 20 years. The S&P 500, by contrast, delivers an average annual gain of just 7%, so it's quite a bit higher. Wine also has only about 1/3 of the volatility of the stock market, and there is no direct correlation between stocks and the price of wine. So your stocks may go down, but your wine may actually hold its value or even increase in price. They are not directly connected. So how do you invest in wine? Do you go to the supermarket and buy a few bottles and then go and store it in your basement? No. Now, this is the sponsored section of the video, guys, and I try to pick only the very best sponsors, and I really wanted to work with this company because their product is just so interesting. So there is a company called Vinovest that specializes in helping people invest in fine wines. Their minimum investment is just $1,000, and that's perfect because this video is called How to Invest $1,000 in 2021. So here's how it works. After you've funded your account, Vinovest's master sommeliers will choose your wine for you, and you need that, otherwise this is an industry that you would have to do so much research in, it's unreal. You would probably mess up if you tried to do this yourself, unless you were some wine expert. And then your wine is stored in state-of-the-art climate-controlled facilities and is fully insured. And in the future, you can choose to have Vinovest either sell your wine and take your profits, or they can send it to you for you to enjoy once it's matured. And by enjoy, we mean drink it, because the wine is really yours. You can actually have it sent to your house and drink it. You're not just speculating on the price of some fictional wine bottle. Now, just like with any market and any investment, there are fluctuations in price, and Vinovest does recommend a time scale of a few years in order to average out to the gains that we have talked about. However, I do think that this is an awesome way to invest $1,000. It beats the S&P 500 over the long term, and for those who are already invested in other industries, it's a great way to diversify your assets to guard against risk. Guys, if you're interested in Vinovest and their services, do click the link below in the description of this video to find out more and to set up an account if you want to. Number 4, gold and precious metals. Now, you might think that gold and precious metals are the investment class of the doomsday prepper, the kind of guy who's got a huge stack of food and gallons of water in his basement. I mean, it's good to be prepared, right? But gold has really held its value and moved up considerably over the long term, even if there have been some stagnant periods. And people say gold and other metals are also a hedge against inflation. Let's have a look at the US inflation rate right now. Oh, 5%. Yeah, that's pretty high. But it is worth noting that the correlation between gold and inflation isn't quite as high as people think, especially in the short term. However, gold does tend to rise when there is a lot of panic in the market, such as the global financial crisis of 2008. Just look at the price of gold in the couple of years following that. So how do you buy gold and silver and other precious metals? Well, you can buy them physically through an exchange such as APMEX, where they'll actually send the physical gold and silver to your house. Look, this is $350 worth of silver. Now, that's pretty heavy, and you can look at the size. So if you invested $1,000, it would be 3 times that. Then you've got gold, which is a lot more expensive, so it's a lot smaller, all right? You would have to get into the tens of thousands of dollars before it started taking up any considerable space in your house. But for both of these investments, you are gonna have to think about how you're gonna store them. You'll probably need to go and buy a safe, but you could instead go for a gold fund like GLD or GDXJ, which tracks gold mining stocks and tends to have larger swings up and down than the underlying asset. And GDXJ is actually down over the last few months, so it may present a good entry point right now. But guys, if you do invest in something like this, remember, like with any investment, the price of your investment may well go down before it goes up. Gold and other precious metals are much more of a waiting game than stocks, okay? This is probably the perfect investment for someone who just has a bit of money they want to put away for years, and then in the future, as the result of some doomsday scenario, they get a massive gain, okay? It's the sort of investment for the guy who has a generator in his garage ready for doomsday. He paid $150 to get a generator outlet installed on the outside of his house, just in case. Wait a minute, this is my house. But anyway, you get the picture. However, in recent years, this asset class has been taken over somewhat by our next investment. Number 5, crypto. Now, Bitcoin is sometimes referred to as digital gold due to its finite supply of just 21 million Bitcoins and the increase in the difficulty of mining, which leads to its increase in value. And right now, there could be a golden opportunity for you to get into Bitcoin and other cryptocurrencies because Bitcoin is down from its all-time high of $64,000. It went all the way down to the upper 20,000s, has now recovered somewhat to about $50,000. It hit the $50,000 mark just a couple of days ago. So you've got a situation where it's still on sale, it's still down massively, but it is on the road to recovery. Now, if we look at the previous Bitcoin crash in 2018, it took over 2 years for Bitcoin to cross its previous high of $20,000 again. But after that, it shot up all the way to $64,000. Now this time, Bitcoin is recovering quicker, and what are called the whale wallets, which hold large amounts of Bitcoin, over 1,000 coins per wallet, are buying back into the market. And this is a very strong signal that the big players want to drive the price back up again. And I say that they want to drive the price up again because this market is highly manipulated, which makes it very volatile. But I still easily believe that $1,000 invested in Bitcoin today could easily turn into $2,000 in early 2022. That would mean $100,000 Bitcoin. Now, don't hold me to that prediction, okay? Because this is a super volatile market, but it's just an example of what could happen. And if that was the case, it would outpace stocks by a huge amount. Now, in addition to Bitcoin, there are also altcoins like Cardano, Loopring, Polkadot are some of my favorites, and there are also a few others that are related to video games and items that you can buy within games. Now, a lot of these currencies present an even better opportunity, but are much more risky, and they are beyond the scope of this video. So to recap, Bitcoin is a great opportunity for the average investor who wants to put away $1,000 for a few years and has the stomach for a bit of a roller coaster ride, but could be looking forward to potential gains far higher than you would get in the stock market. All right, guys, that was how to invest $1,000 in the year 2021. I hope you liked it. Leave your comment on which one was your favorite in the comments below. Check out VinoVest, the sponsor of this video. It's a really great service. I'm definitely going to invest in it myself, and we will see you next time. Bye-bye.